All right. Hello, everyone. Welcome to your weekly market check-in here with myself. I'm Greta Wall, I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. The theme, or the title rather, of our stream today, David, is the AI trade fading? And that definitely seems to be happening as we look at the market and how things are looking on this Thursday. So for you, how is your Thursday going? And what is your thought on, the AI stocks declining, leaving the market lower? All three major indices down today. Market not looking so good.
So for me, it could have been a great day. I made one dumb mistake that we can go over. So I made it a very average day. But versus what's going on in the market, it's I have no complaints. We're in good
All
shape.
right.
Just a
All right.
dumb mistake that I knew better on. So an average day.
All right. So I want to talk about, the AI space. Let's start with some of the mega cap tech earnings. So we got five of the Mag 7 last week. It was Meta, Microsoft. Who was on that same day? Meta, Microsoft,
Google,
Microsoft, and then Apple, Amazon
Apple.
the next day. Yeah. So the first kind of signal, ooh, that's different for me, was the reaction to Meta's earnings report. Meta releasing a really big CapEx number. We're spending really big on AI, and the market didn't like it. Kind of reminiscent of me for how the market started kind of punishing them for spending really big on the metaverse over and over and over again. It was good until it was not. The AI trade kind of seems to be the same way. Like, it's been good. The more you spend, you get rewarded, etc. Meta being the first reaction I've seen that didn't happen. So what was your reaction to the Meta report and how the market itself reacted to that number?
Report itself minus CapEx and the spend is good. Like, no one
Yeah.
can really say that that's not a good report. The company's earning lots of money, trades at a reasonable valuation. What people, I think, finally said, and what I think is clear in a lot of people's minds, is it's been like a magic trick that their earnings can grow at the rate they're growing, revenue can grow at the rate it's going, and they can still increase spend as significantly as they did, and that changed. They can't continue to earn enough and ramp revenue enough to equal the spend they're doing. This is the first quarter where spend was far too much versus their increase in both earnings and revenue. And I think it's a signal from the market that spend is okay if you can continue to pull off these magic tricks. I say magic tricks because we've never seen spend at this level. And we've never seen spend at this level with earnings growing at the level they're still growing at. That changed this quarter for Meta. And people are like, okay, you better earn a lot more money, or you better maybe subdue yourself when it comes to the spend you're doing. Obviously, we've gone through this before to a different degree with Mark Zuckerberg. So it's kind of funny because in a weird way, it's reminiscent of how the stock once upon a time was trading at 8 times earnings and went below 100 because of his spend. So he can kind of change the narrative at any time if he chooses to. I don't think he will, because the stock's come far. And I think he's making a much more long-term bet on the company and the future of AI. And I don't think he wants to miss out. So for now, the stock's being punished. I understand why. Their earnings aren't growing enough to warrant the spend to investors short term, which probably means longer term, it'll be an opportunity as the stock pulls back.
Not just Meta, but the AI leaders in general seem to be really leading the market lower. Definitely today, but in the sessions after, we got a nice boost from Amazon and Apple the next day when it came to earnings. So then Friday was a good day, but then this week it's been kind of meh, especially with the start of November. So what do you think about the AI trade as a whole?
It's choppy, and there's areas within the AI trade that continue to lead, and then others which are breaking down. So, if you really are in the AI trade, you understand there's the core weaves and the MBISs, right? And then you have the IRENs and the Wolves and the Ciphers. And then, of course, you have NVIDIA, AMD, and Broadcom. So within that whole space, they're not all trading together. And then there's memory, which has had the greatest bull market it's had in, seriously, like 25 years, that on its own is far exceeding all those guys in terms of performance, SanDisk and Western Digital and Micron. So One thing that's different is all of those were going up together. Now we have like mini bear markets, like CoreWeave's down 5 days in a row, something like 15%, right? At the same time, Iron, and they're both in AI, Iron was making new highs yesterday. And some people describe that as asset heavy versus asset light. And that's an issue right now, short term. So it's kind of understanding they're not, it's not as easy anymore. It's not like, oh, you're in AI, your revenue's ramping, stock goes up. And that's definitely changed.
A good question from Twitter to go with our discussion here. What's the next focusing theme after this mini correction, in your opinion?
I'd love to say robotics, and I'd love to say, there's a million ways to play it, but I don't think we're there yet. And I think the stocks were ahead of themselves, but I think the AI theme hasn't changed, right? So it'll actually, like, one thing I try and do is there's times to be involved in themes and I get excited because themes, I just want to explain something. Like, I love themes. So during the SPAC craze, I went with the EV theme and VTIQ with 10 and XL. But the market, we had zero interest rates and the market had already gone down a lot. We're now not at zero interest rates and the market's come really far. So it's really exciting. It's not exciting for me to be involved in a lot of themes here. If I'm going to invest at this level of the market, I need quality earnings, revenue growth over thematic, like, hey, in 5 years, this is going to be cool because the market's gone too far. And then if the market pulls back enough and we kind of reset itself, I'll go back to themes. Right now, I'm fine with AI. Right now, I'm fine with biotech, which, by the way, shows a lot of relative strength today. So I'm not going to reinvent the wheel and go with too many themes. I'll tell you, within the AI trade, I think like memory's gone far today. The first thing I did, or one of the first things, was buy a boatload of puts on MU as it was exploding. But that's not a new theme. I think it's gone too far. Now I have planned to buy NVIDIA if it comes into the 50-day, which is 3-4 points away. So I'm not worried about themes yet. I'm worried about making money and finding the best risk reward. So that means the Qs may be into the 50-day at 600, NVIDIA at the 50-day, Palantir, maybe. I know some people don't like this, but Palantir at the 100-day would be very appetizing for a 7-15% rally in a very short period of time. That's down in the 160. So that's what I'll be doing rather than looking for the next thing. But longer term, I believe ADC and biotech. I believe robotics. I believe that one day there is a real shot. As fanciful as he talks and as wild as it sounds, if you believe in what Elon's saying, it really is the highest TAM out of anything we've ever seen. So hell, I'll be focused on when Optimus is available to the world and people have robots, and I'll be buying one. Like someone asked today, when they come out at 20 grand, will you buy one? And I'm sure there'll be a new one that's much better, but I'll buy one right away. I mean, can you imagine having a robot in your house that can do things? Even if it sucks and there's a new one in 6 months, which undoubtedly it will, because the first of anything is never great. My point is, all those themes will exist for now over the next couple of weeks. I've been pretty bearish. I was bearish yesterday into the rally. Just seeing how far the Qs are bouncing here. I mean, and I felt a little dumb because I was like, I don't want to buy a lot yesterday. And I watched the market go ahead, and then we see what's happening today. So I'll stick with earnings, quality names. I'll stick to Amazon, which for me, the theme was, oh my God, it's trading at its lowest valuation in history. I think this quarter is going to surprise people. I think they're much more ingrained in AI than people give it credit for. And risk reward, I see it as a great play. I don't see a ton of risk and I see reward. So that's where I focus. I sold a lot when it got over 250 into 255, and I'd gladly buy it back on any pullback. It needs to come in stretch 4 or 5 more points to add back. So sorry to be long-winded, but themes, if the market's going to correct, are not exciting to me. Like, I get it. RR was fun and everyone wants to buy that cute little robotics company, but no one cares about it if the market's going to correct. They care about NVIDIA. They care about Palantir. They care about JPM. So that's my answer.
I mean, as you have, you say, you tell the inner circle, you've told me many times, in these kinds of market environments, you're going to be focusing on the best in breed names when it comes to each space in the market and the leaders in those spaces. Jimmy followed up with his question saying more like active trading. Got you. That makes sense. Definitely a stock pickers market versus, just you can buy anything within a theme and it's going to follow the rest of the trade when it comes to the bigger names. All right. You mentioned Tesla, robots. I would love a robot to mop my floors. That would be the thing that I want a robot for. I have like one of those Roomba robot things, but the mopping feature is
make
not
sure my
that
kids
good.
are in bed by 9, the other one 10, clean up their
There's
rooms.
specific chores I hate doing. Mopping is the one for me. Okay, but Tesla, there's obviously a big vote today. The shareholder meeting starts at 4 p.m. Eastern time today, and that's been the focus for this name. Will Musk's pay package get approved? Nearly $1 trillion. Not nearly $1 trillion.
No,
Yeah, 800
It just sounded
billion.
crazy when it came out of your mouth.
I'm
So you're like, I can't be right, but no,
like 898 billion. Yeah, okay. So anyway, will it get approved? I think it probably will. But that's been kind of the cloud hanging over Tesla. What do you think about the stock from here after today? Kind of give me your ABC scenario, if, when, etc., all that.
So I'm long stock from about 20 lower. I did trim some yesterday because we have such a binary event. I think 90% it gets, voted yes. Anyone who doesn't vote yes is an idiot. I mean, Tesla would never have this valuation in a million years. It would be cut in half without Elon. The valuation, and when people say, well, it's valued as if it makes more than all the car companies combined, yet doesn't make the same money. But that's because of the jockey, and you get rid of that jockey and it's not the same company, because everyone's willing to bet he will get robotics right. He will get self-driving right. He will get robotaxi right. And thus you're getting that valuation now for what may not come true for a year, 2 or 3 years. You put in someone else, that's gone. So I don't even understand why people would vote against it. But you have to, understand that the risk is there, especially when you have these big institutional funds that are voting no to the package. So I'm long. I've told people if it doesn't go through, I could see the stock down 25% in a tick. If it goes through, so many on the street are looking for 488. Will it go and test new highs? It's the only Mag 7 name not to. I don't want to overthink it. My concern is too many people think that. So I'm going to play it by ear. I'm long at the right price, so I don't mind staying long. But in terms of adding to risk, I'll play it by ear and see. I do sense that it wants to make a new high and it wants to play catch up, much like the way Amazon did. And sometimes what is most simple works. Like, you don't have to outthink yourselves. So I'm open-minded to it getting through this sticky, like it's kind of resistance, 470, 473, and going to 488. But I'm also a little concerned that so many people are looking for the same thing. Sometimes that doesn't work out. So I'm more apt to expect the stock to rally 30, 40 points if this goes through. But I do understand that's part of the trade, is a crowded trade. Many people are looking for that.
All right. Let's talk about earnings season a bit. So far, this earnings season feels like a lot of the good reports are baked in. Like you said, the market has run so far at this point. So many of these names are so far up. Like, how much more can they go on a good report? Very reminiscent of last earnings season. Same kind of thing. So what's been your read on this earnings season and what it means for these companies moving forward?
To be cognizant of that, but understand that doesn't mean these companies can't reset themselves, pull back, and then go higher. So I think for anyone who wants to understand what that means, just look at how Micron sold off on earnings. I'm not saying because I said it would happen, I did, but I'm talking about the after, actually. It did go down on earnings. It did reset itself, and then it blew through highs and went up another 60 points or 50 points. So in terms of those that are looking for these lotto type ideas or to bet into earnings, understand some of them are built in, but that doesn't mean the pullback won't be the pullback that refreshes and to get long them. So SanDisk may not pay people tomorrow, even though it's probably going to be a phenomenal report tonight. Well, that's because the stock was 50 in September, right? It was 50. So I think it was September. Anyway, the point is, but when it pulls back, Will it be buyable at 190 or something? Probably. So that's kind of what I take from it is you can't really bet too big into some of these that are like white hot into the print, but that doesn't mean these pullbacks shouldn't be bought. And that's the way I look at it.
All right. We said it is a stock picker's market. So for you as a stock picker, what are some of the names that you've been focused on, the levels on those charts that you're looking at, and what are some of your plans and the trades you like that you're hoping to get into?
So Amazon definitely is one of the few swings I've been pretty aggressive with and really comfortable up here. If we pull back into like Amazon, I need to get closer to the 8-day. The 8-day is still about 4 points away. I would gladly add back to the position. I think it's the ultimate big cap catch-up trade. And if the market's going to continue to make new highs, I really feel strongly Amazon does after that earnings report and then their deal with OpenAI. So that's one. Immunome, which has recently pulled back a couple points after going up like 200% since April, has a big event, a binary readout on phase 3. I believe it's positive and the stock is in the mid-20s, but there's high risk. And if long-term, I think even if this doesn't work out, it's not a big important piece to the puzzle long-term. There's far more important pieces for Clay and Immunome. I think the stock would still go higher, but you do have to know the stock could be cut by 20-30% on this phase 3 readout, which probably is in the next 4 weeks. Moving on, AMD just had an awful correction today. If it were to get back to the highs of the day after the OpenAI announcement, 227s, looks very interesting to me. I don't think the stock's done. I just think it needs a break, and that's what we're doing today. Getting a nice little rally here. NVIDIA, don't reinvent the wheel here. It's pretty simple. Business is obviously great. It ran straight up. So you get a pullback into that 50-day, which I just mentioned. That will undoubtedly be a focus for me. And those are some names that I'm most keyed on. MP is tonight. That theme has fizzled. But I think MP, given that the United States is now their largest shareholder and they have a humongous partner in Apple, I don't think MP's done. So I think they've taken so much out of the stock. This could be one to focus on again. So I will really be paying attention to earnings tonight and more importantly, the guidance they give going forward. So those are definitely some names I'm most focused on over the next couple of days. And this already happened today. So I said, listen, my ideal tomorrow is SanDisk reports a blockbuster quarter. It opens up huge. I get short the stock. I buy a bunch of puts also that expire tomorrow. And I think we have a home run. It's a trade I do often when the earnings land on a Thursday night. The bad news is SanDisk is already down. So what I did is I bought Micron puts instead today just to hedge myself and be in it, and they already paid. Where I'm getting at is if SanDisk and Micron and Western Digital all run again and all make new highs, I think there is a great short-term short opportunity because and a lot of people are like, well, you see, like pricing's gone up several 100%. I get all that. But stocks know this. They don't go up by accident. They priced in a lot of this. I do think there's a larger pullback in this entire group too. Now, you can't short these stocks on weakness because they're the leaders. So they inevitably bounce. So like Micron today, I said, if it's down, I'm not shorting it. So pre-market, I shorted some. When it was above 240, came into 236, I covered. Then I said the real trade is to do puts. We need it to ramp. It ramped. It got to like 245 today, and that's when I started buying a bunch of puts. I do think that's a trade. Like one thing this market has now is some volatility to it and ways to play both sides. So that's something I would look at because this whole group is really stretched. Doesn't mean it can't lead, but it's stretched. You just have to understand how to short these because you don't short SanDisk after it pulls in 20 or else it's gonna go right in your face and you'll end up covering. So those are some areas I'm looking at overall in the market.
All right. October was a good month for the market, a strong month for the market. Not typically seasonally a very good month for the market. September, October tending to be seasonally very weak. So now we're in the what is seasonally strongest time of the market, like November, December, usually some great times in the market, and it's not starting so hot. Do you think entering this period of the year at the levels we were at just doesn't set it up to be able to continue
Well,
all the
let
way
me
to the
ask
end
you
of the
this.
year?
I got so I like to say seasonality, and my ideal scenario, I've been saying it for a couple of weeks, is we pull back now, right?
Mhm.
Reset, get some sellers out so we can rally come Thanksgiving, Christmas.
Uh-huh.
But to just bet on seasonality when frankly seasonality is not working would be kind of dumb,
Right.
right?
Mhm.
So I'll take it by ear, but my thought was this really sets up well for bulls
Mm.
because you needed to take out some sellers. It's been free money,
Mhm.
and there's a lot of people late in the game that are buying. I was talking to the chat today, and I'm like, there were people buying AMD for whatever crazy reason at 258 yesterday. That's not like sophisticated long-term money. That's people chasing. So when that happens, I mean, because it was 235 the night before. So when that happens, you need to take that sort of investor or trader out to kind of take out some of the fluff so you can kind of, regain some strength again. So I think this all sets up well for a move, not based on seasonality, just based on logic towards the end of the year because people love Thanksgiving, Christmas. And that's not even seasonality as much as it's just facts. That's how the market trades. So that's kind of what I'm looking for. But every time I think the market has a little bit more downside, we bounce. Like yesterday, I was like, oh, not again. So the only thing I could say is I'm not drinking this Kool-Aid. I don't like the setup here. And, I'm not buying higher here. And thank God I was right. But
Yeah.
now we're bouncing. We'll see. I don't think we get too far today on this bounce.
How has it been for you trading in this market that it's hard to read a trend because
Great.
it
I don't need trends or any of that. I
Mhm.
just need to know where to go, where the puck's going, and where to
Mhm.
focus. So one
Mhm.
thing we don't need where we are better than most is not just chasing a trend.
Mhm.
Example, Meta, believe it or not, the past 2 weeks has been one of our biggest winners and from the long side. Because after 4 days down last week, there was a point where I said, oh, this is a home run trade, but don't think it's a swing. And that was, I think that was after earnings, the day after earnings, it was crashing. But I said, you got to wait, you got to
Yeah.
wait. And we really layered into that thing into 650. My average cost wasn't at the bottom, it was like 659. But same day rally to like 680, right? Or 675.
And you did
And
it
really
again
had some
Tuesday.
size. And then again,
Mhm.
just 2 days ago, I said
Mhm.
4 days down. I don't like it swing. I think it's going to 600, but I do think there's an excellent trade to load up here, and we did it again. So my point is, you just have to kind of understand. And at the same time, I wasn't bullish the market, but I was bullish Meta for a trade. So as long as you understand how stocks work, oversold conditions, and things like that, it offers both sides. Like I faded the trend in Micron today and made a lot of money, right? So I don't mind the volatility. The trend, which has been AI and just straight up, needed a break. And like MBIS, I bought it at 101, went to 95, then it rallied to 128. I sold it, it went to like 131. Then a couple days later, what did it hit today? It's 111 right now. So if you manage your size and you're not worried about being down a couple points, because you can't trade in this market and like stop out because you're down $1, then these wide ranges present tremendous opportunity. The key is not to get too big and assume you know the exact price, or else you'll get stopped out. So don't need a trend. Volatility works too. Trends are great, but we enjoy volatility as well.
Definitely wearing your day trader cap right now instead of
Yeah,
your
which I'm not.
swing
I'm not a
trader.
day trader, but I'm not comfortable buying a ton of stocks and expecting to be paid long term here. So I would say short term swing trader, like 2-3 days is
Yeah.
what works best for us. But if it works for a day, that's fine. Like we did these Micron puts today, and I bought them at 8. I bought them at 750. They went to like 1050. And I had time on them. They weren't just for this week, but I'm like, who am I not to take profits on these? So it's not
Right.
that I want to be a day trader. It's, hey, I made 40% in a really short period of time. I better take a bunch off.
Yeah.
So that's the
Great at
market.
reading what works in the current
30%.
market and doing it instead of being stuck on one strategy that maybe not going to work right now.
I think
All
it's
right.
time to be a little bit more careful, bottom line.
Yeah. All right, David's the real trader. So I want to let him get back to his book in the inner circle. But if you'd like to get David's free weekly newsletter, you can go to t3live.com/DP. It's a weekly newsletter sent out typically on Tuesdays, once a week, with all of David's current levels, what he is focused on, what analysts are saying about the market, etc. It's a really great readout of his morning call that is kind of the Bible for the inner circle every single day. So again, that's t3live.com/DP. David, have a great rest of your week. Maybe a nice big lotto Friday in the inner circle. That'd be fun.
So
We'll see. Have a good one. Talk next time.
have a great day, guys.